Okay, good evening, friends. Whosoever has joined, we will be starting one video, which seems very important for me, and I thought to share you this video. This is something on what we have did last, convergence and divergence. This is historical chart, well explained by one of the analysts. So we'll go through this video, and I'll just try to help you out that what is the importance of this video when we are analyzing current markets. So just look at what the volume pattern or the index stocks together are showing, and how a very similar pattern showed up. In my last video, I did look at multiple intermarket divergences, and one particular period which I covered and explained in detail was this one in 2001. What interesting is one of those, while this expanding pattern here started to sell off well ahead of our own market. What's important also to note is that this was already, we were into a bear market as far as the index is concerned. Many stocks had sold off, but we still had one key index stock continue to make an all-time high into this period amid what was a lot of volume in the market. Okay, and when I say a lot of volume in the market, I'm of course referring to key stocks, not of course not across the board. But this is index stocks number of shares, and that time existence of Badla market, and most of the index stocks created substantial volume in that area. And this one stock that made an all-time high halfway through this phase was Reliance Industries. So one index stock that was trying to support the market, at the same time eventually it did pull back. Now that pullback came also after it had actually broken out of a multi-year range, and so the pullback was only a longer term correction, but in terms of the bear market it was trying to support the index halfway through. So that's the important part I wanted to note, and also note that this volume behavior showed much higher volumes than we've seen throughout this period prior to this period. Not even at the peak that we see this kind of crazy volume. So that's the important part I want to highlight, and then I'm going to take you to where we are today on the Nifty. Also note that this time period also created a lot of interest on a potential turnaround, because we broke past this falling trend line, and so it was in a sense a kind of book rally. If I do an HNS neckline here, you're pretty much holding this neckline if it is a downward slanting neckline. So coming to the Nifty, what we are witnessing right now is this substantial jump in volume. Note, market-wide volume is not so high, it is much lower than what it looks like over here, but Nifty volumes are significantly up. The one stock now out of all the index stocks that appears to be making new highs, and that is Hindustan Lever. Okay, so it's not Reliance Industries this time around, though it was one of the outperforming stocks up to the August highs. Most of the key index stocks are not making new highs right now, not even HDFC and HDFC Bank, they've still not done so. But Hindustan Lever was one that did so, which means in December it made one more new all-time high, even as the Nifty has not yet done that. Volumes way higher than what they were in this preceding period, and in fact these volumes are now equal to what we saw at the bottom of 2009. So this is almost equal to what we saw back there, a very similar reading that we are getting. And after a prolonged period of time, though you can see a mild increase in volumes throughout these last few years, the big jump has only come after the sell-off, whereas here the big jump in volumes came at the base and on the takeoff on the way up. So this increase in volumes is substantial. It's already through one sell-off that we've seen in the market, so it's not like we are at an all-time high. And the reason why it makes it very similar is that while people try and make comparisons with 2008, what is very similar to what has happened post 2013 is more 2000, and the reason is this: I often called it the late autumn bull market. Old readers would remember that annotation, and the reason I called it that is I thought it was very similar to what was happening in the 90s, which is after 94, the stocks, which is communication, technology and information technology, which is media, and those three sectors became the best performing sectors. This time around, we've seen that happen in areas like NBFCs. We've seen it in particularly in consumption, which is the consumer related stocks, which is why Lever shows up on this chart. And so the similarity in these two cases was the theme of outperformance in sectors, the breakout to new highs in the index on the back of only a few sectors, and now at this stage, once we've had a peak and a sell-off, only looking at a particular index stock which is holding out the index amid what is a lot of heavy volume in the index itself, which appears unusual because while some people mark this as a right shoulder, this is not what you typically see in terms of a right shoulder heavy volume. Of course, on a market-wide basis, the volume here is much lower, but this volume here represents only the Nifty stock volume, and which is why it is similar to what I saw in 2001. What followed then, of course, was a peak in various stocks that were either holding out in terms of not having fallen substantially, or the ones that were the best performing stocks of that time. They finally gave up only after that phase. That heavy volume was a period where people were toying with the idea as to whether the trend up would actually resume, but it did not, and eventually gave up, and the most substantial declines in the best performing stocks came only after that phase. And so we are in a similar point where people are probably hoping that this is a move to new highs, but if this ends up being a failure case, and right now, like so far, what we are seeing is only one stock holding out for, there may be one or two more if I'm not looked across the board, but the point is there are not more than even half a dozen that are doing this, and the reason the index is holding up so well is that some of these key stocks that have become large in terms of market cap, many of them have been included in the indices, are therefore keeping the index from really showing the real loss that has happened in the underlying market. And does this volume signify something similar going on, is what we're going to find out. The one word for a key index stock trying to hold up the market is always distribution.
But what analyst was trying to say, he was talking about the 2008 crash, and during that time he was just comparing the stock of Reliance, and this was the same pattern which was visible during that time, wherein Nifty wasn't able to make or break previous high, and the stock has broken the previous high. And this is what the divergence he is talking about, wherein the indices or the Nifty stands weak, and stocks are just trying to push or maintain the current prices. So that is what is happening. Few of the stocks which are strong enough, say consumption sector, we have Tower, we have Hind Unilever, so ITC standing out, or I mean kind of Reliance, which are holding the market, but even Reliance, HDFCs, they're not able to break previous peak. So this time what he's talking about is that this divergence could be a weak divergence, wherein stocks are not able to maintain Nifty at the levels where it should, or if things are all good, then this Nifty should have been cross the previous levels, previous high, and should have moved in tandem to other stocks. So the scenario here stands very much same, wherein we don't have other sectors performing at par. We don't have NBFCs, we don't have banks performing. We aviation, in fact, we don't have steel sector performing. I'm talking about metals. So all the sectors are weak, and we don't have new legs to participate. If we talk about even IT, it's just trying to hold on, not able to break previous high. So at this situation, when all the sectors are under stress and indices are showing kind of divergence movement, So there is a possibility of a sharp fall. Guys, please mute. Okay, so there is a possibility of a fall which can happen from this point. But one divergence, if we compare this with Dow Jones, you will understand much. I'll take this weekly again, and so if we compare this with Dow Jones, the picture is totally different. So that was what analyst thought. Okay, so that is the possibility, and this is something very different, wherein you can see Dow Jones falling from 27,000 peak to the bottom of say 21,650, and at the same time Nifty started traveling upward. I mean, there's a divergence in Nifty. So what if Dow Jones recovers, or any statement wherein Dow Jones move back to say levels of 24,000 and safer zone 24,400, 500, and shows some kind of reversal, then is there any possibility that this consolidation which we have made against the trend may break upward? Say a kind of short covering may come. So that is a possibility, because we have 1 month for our budget, and we have some 5 6 months for election. So if say BJP is in power, so this is a general election period, they may come with some populist budget, some relaxation. So if that is the case, Nifty is gonna hold this black channel trend line, which is 10,438. So this blue line, you just mark it in your head, or just write it down on your paper, that if this trend is breaking anytime soon, our uh, our Lakshman Rekha, or a bear line which starts at 10,438, is a point. If it breaks that and closes below, we may expect this channel at 9700 or 9625. But till that time, I think you should stand still in the market and look for stocks which are highly oversold. When I say stocks which are highly oversold, we may count few mid caps which are down by say 50, 60%. Therein you can have that 20%, 15% upside. The current situation, Dow Jones has recently touched say 23 300 or 400 on higher side. The very strong resistance point is 23,565. If it breaks and consolidate above, then there are chances that we may get back to a safer zone, wherein a fall may stop, and a consolidation period may get on. So keeping that in mind, I feel that the crude oil has even made a beautiful low of 50 at the Brent, and we are just trending between $50 and $55 for a while. So if this consolidation holds and reverses on upward side, then there are chances that we are getting higher high. But if we are breaking down, so Dow Jones breaking 21,000, and I may must tell you that Dow Jones may touch 21,168, and that is my perfect bottom to buy. Though I predicted somewhat some 7 8 months. If you check my last videos on YouTube, you will find that I've given a target of Dow Jones 21,800 to be precise, or maybe 700. You may find that that time market was at 26,000, and Nifty was at par. So this time Dow Jones has corrected from 26,000 to 21,800, but we have somewhat, maintained ourselves on Indian indices. This may be due to elections, okay? And if it is due to elections, then this is going to continue for next 3 4 months. And if we are able to hold this in January month, so this week was pretty very good. We have just touched the channel support line, and we bounced back and closed near to 900. And this is the point wherein, just note down again, all those who are live, 11,088. The first point of bull is 10,888, which I have discussed this in last webinar. Trend 888. Once we close about 10,888, our first target is 11,088. So this time there are many few 88s. So once we cross this 11,088, we are strongly in bull trend, or you can say that there is a strong possibility of sharpest short covering, which may take Nifty to new high levels. So we may hit this long-term trend channel, which is a good resistance, which is say 11,500, and may spend some good time to break higher highs. So the point of concern is whether we are going to sustain higher high. So at this juncture, it looks bit difficult when we talk about large cap, but mid caps may participate well, and it may give some sentimental boost to carry the rally. So a lot more depends upon February 1 budget and how things pan out. But looking at the last week, markets seems to be well in control of bulls. And at the same time, we have made the international bottoms on crude and Dow Jones, right? And I don't think there is much of correlation left in until unless there is an announcement of recession or a sharp breakdown in US market. I don't feel much of a panic situation wherein we are holding 10,438. So all those longs, all those support points are all standing at this level. So I think you feel free and safe till the time we maintain this 10 438 odd levels. Okay, we have many eights now. I don't know how, but things are well under eights. So 10,438 and 10,888 and 11,088. So these are the levels from low to high. Okay. So this is what I was trying to explain, and this is what this analyst was trying to explain, that the same scenario of 2008 is visible, wherein volumes are pretty high standing at this time. So if we are unable to hold, this is a clear-cut pattern wherein uh, everybody is making out that we have a head here, we have left wing as a left shoulder and the right wing as a right shoulder. So I mean, analyst and or any retail or any good HNI is eyeing this HNS pattern, and they are just looking to break down. And if this ABC correction as well, then it is heading towards, well, 87 or 8500. But I think till the points are broken down, we should not take any step which is, pre-calculated or meditated. Wait for levels to cross, and then reverse your position. So as I said, this is a good point of maintenance, and bulls are really taking over bears. So we need to see how good we are able to maintain the first 2 days, say Monday or Tuesday. Okay, so if you are able to hold this 888 thing on the indices, and we close above, then just be happy, because we have Dow Jones reversing from this point. We have made an inside bar to the previous one. This is previous week. Okay, so we have a Harami pattern at the bottom, and fair chances of making a morning star if there is a reversal. So if it's there's a possibility of reversal, then I think next week is something which will design the next month. So next 7 days is more critical. So next 7 days we are going to spend a range bound activity in Nifty. Okay, so I'll just cross down now Dow Jones, coming back to Nifty analysis, which we usually start. So Nifty may crack somewhat to the tune of say 10,626. So all those Nifty lovers, they can mark this point. 10,626 is a good buying point, and you can have a stop loss of 10,550. Buy 10,626, any near to 626, maybe 630, 35. Have a stop loss of 10,550 with an initial target of 11,000. 88 and 11,268. So we have lot many eights. I have already mentioned about this. So we have a buy call there, and the moment it breaks 550, there's a first sign of worry, but we will still be in a situation to reverse from that point if we hit the stop loss, because the main worry line is 10,438, which is, I think, gonna stay. It's a good reversal. It's a good divergence on Nifty, wherein Dow Jones has made that low. So what if this head and shoulder pattern, which is visible to every analyst, every TV channel people, talking about, if this pattern negates, there is fair possibility of short covering, which I am looking at. So current scenario is well intact, and I am looking for large caps, and stocks are reversing well, possibility of making few higher high, but at the end, over a long term, so if populist budget and we are making good highs, so that the valuation still carries, the valuation can trigger to 13,800 as well. Okay, I'm adding a new part to this. If it is adding, if I am, I'm just not overstretching it, but if BJP wins, there is a fair chance of a new entrant taking new higher high levels. And till then, if we are maintaining, say, 11,200 and 500 band, then it's the quickest mode which we may fly to 13,800. But just pointing you again, this video may be there on YouTube, but my points are very clear. From 13,800, I am selling this market down to 8,700. Just be prepared. You are all my lovely members. I am discussing this idea, and I'm opening up for next 6-8 months, because since I love you all, I don't want you to get hit with this negative sentiment. So if BJP is winning, it's not good for us, in a sense that although on a fundamental basis it's very good and we want BJP, but on a technical reason, if BJP wins, people will enter the market and the market may drive for next 1 month. And the moment it gets back into action, there is much sharp expected fall. And this is an internal system which will hit. It's a domestic system. Things are a bit hidden or covered when we say the fall in NBFCs, when we say a few NPAs, when we say ILNFS default. So these are not small things. So just to clear the system, this may happen post election. It's just to maintain that sentiment, things are well in place. Okay. So I'm very much clear. I think I've discussed the point. Just to finish this top, I'll just marking it. The best support point is 10,438. We are standing at 10,838, and our best bargain buy on Nifty is 10,626 with a stop loss of 10,550 with a target of 11,088. To be precise, if it carries that, we will just roll on, and our short-term target stands at 11,268. Okay, the bull trend intact when we cross above, say, 10,888, and we close above that and form some short-term positive divergence. Okay, so keep that in mind. That is Nifty.
Okay.
Okay, thank you. Good night. Thanks for being there. And we have a good consolidation happening in January. So January month is seems as if it's going to hold and move up. We are closely tracking international markets. It seems as if crude has also corrected much, so it is giving good support. So let's hope that it holds that 626 odd levels at the bottom. And if we break 10,888, we are getting into a good short covering mode, which will carry to 1188 and 11,268 for January series. If populist budget on say February 1 on a budget day, then this will carry to even election. So that is going to be our new high. 12,750 is my first target. Second target is 13,800, and from there we are correcting it to 87. That is what I'm predicting. It's a probability. Don't go by me, by my words, and I'm not always correct. So have your own calculations. Thank you. Good night.
Night.